Good morning, everyone. Welcome and thank you for joining our webinar today. And this is Jyoti here, and we are very happy to have you here on this Saturday morning. In today's webinar, along with Sudhir Pai, we have with us Anup Nayak from My Time Equity. Before we start the webinar, I would like to take this opportunity to introduce you to My Time Equity and Sudhir Pai. As an actively managed portfolio management and RIA firm, My Time Equity takes pride in being your dedicated partner on this financial adventure. Sudhir Pai is a founding principal and serves as a fiduciary investment advisor representative for the firm. And we have added the QR code here from which you can join our WhatsApp community to get the daily update on equity markets, real estate, and ventures. Before I hand over to Sudhir, let me take you through the slides on the disclosure for which our attorneys mandate that we show prior to every webinar. If you have any questions during the presentation, please feel free to type them on the Q&A box. We will have them at the end of the session. If you need Sudhir's help, please write to wealth@mytimeequity.com or call us at 972-330-2771. Over to you, Sudhir.
Thank you, Jyoti. You can hear me, right?
Yes, I can hear you.
Okay, awesome. Very good morning, ladies and gentlemen. Thanks for joining today's webinar on the market update as well as the topic commodities and crypto. Are we hedging or are we chasing? And coming to the market overview, the markets were kind of flat. We had one day off on Thursday for Juneteenth, but otherwise the markets were kind of flat, and S&P fell by about 0.02%, and the Nasdaq was flat. Gold and Bitcoin were also down, and all this is, I think, purely profit taking, which usually occurs in the second half of June. Seasonally, the first 2 weeks of June are very good weeks, and the second 2 weeks of June, because of the option expiries that take place on the third Friday of the month of June, usually we see either a down down fortnight, or a flat fortnight. So we saw a kind of flat week last week, but I think the selling pressure is going to continue on Monday, because usually when we see not such a drastic day on the option expiry, which happened on Friday, which is yesterday, we may see some continuation of sell-offs on Monday. So we just be prepared for seeing some downside on Monday. And also, we are today in a very news-driven economy, news-driven market. A lot of things happen over a tweet. We are seeing global geopolitical tensions going on in the Middle East, and US deciding to not be part of it for the next 2 weeks has given some level of pause to the market sell-off, I guess. But we have to see what happens in the next 36 hours, with respect to geopolitical tensions. And when it comes to FOMC, Fed Chair Jerome Powell was very clear that he is maintaining his stand. There is no interest rate reduction this year, but they are expecting about 2 interest rate cuts, in 2025. And when it comes to tariff news, things are not going very fast. Negotiations are going slow, and Canada has clearly stated that they will revise 25% tariff on steel and aluminum if there is no trade deal in the next 1 month. So a lot of negotiations going on, looks like, with the EU, India, Canada, and Mexico, and obviously China is good and bad news all the time. So very clearly, there are a lot of uncertainties that continues to linger, and we are going to see a sideways movement most probably for the rest of the month. And typically, that is how seasonally things have worked. And from a technical standpoint, we feel the market should not come under tremendous stress till the 21-day moving average is broken. 21-day moving average represents momentum in the market. So if this momentum breaks, then obviously, the algos, which kind of does massive trading in the equity markets, is going to do some sell off. And then if it is going towards the 200-day moving average, then we have a bigger problem to face. But all that depends on all the good and bad news that keep coming out on a daily basis. So overall, stay put. We are all long. We are 100% invested in the markets, and we are not hedging our positions at this point, given that the earnings were good, and all the uncertainties have become less uncertain. So stay put in the market and continue to see how it goes. Next slide. Okay, so coming to commodities versus equities, right? So we have seen a lot of upside so far in 2025 when it comes to commodities. And when we look at commodities, we look at gold, we look at silver, we look at platinum, copper, Bitcoin, and yeah, these are the few that are in our portfolio. And we saw gold really take off in 2025, more than 28% return. Right now it is kind of consolidating because it had a solid run up. Right now, we feel that the sideway movement may continue in gold, and after that, if these geopolitical tension, this destabilization of dollar as the global currency, if all of that takes place, then most of the countries will start accumulating gold versus dollars. And I think that is where we will see a further spike in gold. And gold is also an hedged commodity. So, the drop of gold significantly usually has not happened in the past. So, it's a good hedge as well as a good, risk on asset right now, because feels like a risk on asset right now because, most of the countries which are trying to accumulate gold versus the dollar are going to do it, and they are going to sit on it. So it's important that there is some exposure in your portfolio to gold. And when it comes to silver, silver usually follows gold, and the ratio between gold and silver has been there for a very, very long time. And silver has a lot more uses in terms of how it is used in businesses, industrial demand and things like that. So silver saw a major spike in the last 2 weeks, and we think it is going to continue. But silver is a very, very volatile commodity, so you will have to be prepared for seeing the massive ups and downs. And if you look at the chart, we saw a long period of consolidation, meaning sideway movement. It goes up, comes down, goes up, comes down. And if you see over October to almost July till June, you basically did not really see a real big upside. But July to last 2 weeks is where we saw a massive upside in silver. And right now, all that upside that we saw, there are traders now taking some profits off the table. But we feel that silver certainly has broken out, which means we may have an opportunity to see a lot more upside, because the ratio between gold and silver, that ratio is now a little skewed because of the gold's continuous up movement and silver going sideways. So in the next 6 months, I personally believe that silver is going to have a lot of upside left, which I think will be taken. So silver also makes sense to take some exposure as part of your commodities portfolio. Next slide. Okay, so I didn't touch on US oil, but oil which has been on a downslide, you see the chart on the left hand side, the slope is downslide. So but these geopolitical tensions in Iran and Russia and Ukraine, this is going to certainly push the prices of oil up. And the concern that the Fed also has is, whether this tariff and the oil price increase is going to bring inflation back. So all of this is where the uncertainty prevails, in the market. But at the same time, if any war starts, things won't end so soon, right? It will take 1-2 years for any war to come to an end. And between Israel and Iran looks like an escalating war. So the price of oil which went up, almost 14% last week on one single day, and then we saw a little bit of a pause there. And for the year, oil is up 34%, and we feel that this may continue a little bit. Otherwise, it may be on a sidewards movement, depending on how this war situation is handled. So commodities, oil is also one of them, which has been really outperforming the S&P 500. And coming to platinum, platinum has remained very horizontal sideways movement. If you see the chart for the last almost 7 months to 8 months, there has really been no progress in terms of the growth of platinum's investments, right? But if you see, since last 2 weeks, there has been a massive spike in platinum, and it's up almost 48% for the year. So it is a very volatile asset. If I told you that silver is volatile, but platinum is even lot more volatile. And if you look at the last 15-year chart, platinum really did not give a great result for the investors. But now with what is going on with this tariff and with the war situation, we feel platinum may have a lot more upside, and the behavior of this metal may not be like what it used to be in the last 15-20 years. But again, time will tell. Again, my job here is to educate you with the different commodities out there. We have platinum in our contrarian portfolio. If you go to our website and look at the contrarian model, we have platinum in that model. And I'll show you the year-to-date performance of our contrarian model. It has done pretty well, and one of the reasons for that is because we have a small exposure to platinum in it. We don't have platinum in our metals and crypto model, but it is in the contrarian model, because I decided to put that in contrarian model because it has spiked up when everything else is falling apart, and you will see the numbers when you look at the performance of our models. Next slide. Okay, coming to cryptos, crypto did very well week before last, and we saw 112K, on May 22nd. And now we are seeing kind of a sidewards consolidation, and crypto usually, particularly Bitcoin, it goes with the M2 money supply. M2 money supply means the printing of currency all over the world by different countries, and the quantitative easing that takes place on the balance sheets of every other country. So whenever money becomes cheap, a Bitcoin, which is one of the scarcest asset, with only 21 million coins that can be mined, this kind of pushes up, because the believers of Bitcoin and those who believe that dollar is weaker and Bitcoin is more stronger, and this is going to emerge as the global currency, at least in terms of exchange and store of value. Bitcoin is looking towards going to almost 200K by end of the year. But it is also very volatile, because it is 24/7 market. Buying and selling is easy. There is no regulation. It is still wild west with respect to Bitcoin. But with the ETFs getting launched, and ETFs trying to accumulate as many Bitcoins as possible, and more ETFs getting launched on Solana and XRP and Doge and Shibu and all the other large cap coins, we are seeing a lot more stability in Bitcoin as well as the overall crypto space. Recently, the Genius Act got passed. Genius Act actually gives more credibility to the stable coins, and stable coins means those coins which are backed by US Treasury. So just imagine, if there is a crypto which is backed by US Treasury, and people living in all other countries who want to hold the strongest currency in their hand today, which happens to be US dollar, they can buy these stable coins wherever they are, whether they are in Nigeria or whether they are in India or any other country, right? Developed or emerging. All these citizens, all the sovereign funds, if they start accumulating stable currencies, stable coins, the overall market size of crypto is going to become huge, and that is where I think blockchain will really kind of take off, and we will see crypto coming to the mainstream. And the day the Genius Act got passed by the Senate, we saw a massive drop in MasterCard and Visa, and that is purely because the credit card companies may end up losing a lot of business if the crypto blockchain theory gets passed as the next technology, and the whole peer-to-peer connection not requiring a lot of authenticators in the process. All that is going to come true in the near term, and because of that we are going to see a huge upside on some of the crypto coins. And we had launched our fund. I'll take you through our fund very quickly in some time. But coming back to Bitcoin, the chart shows sideways movement. I think this will continue for one more week, and after that we should see an upside performance on Bitcoin. We are very, very bullish on Bitcoin, and I personally feel by end of the year we should be seeing somewhere between 180 and 200k on Bitcoin's uh, face value. Next slide. Okay, so quick overview of our digital asset fund, also called as crypto fund or the Bitcoin fund. Majority of our our corpus will be in Bitcoin. So the way our fund is kind of created is, the thesis is 70% of the money will be going into the hands of very high quality advisors and hedge funds, who hedge cryptos, and then 30% of the portfolio will be allocated to uh, Bitcoin and stable coins, which are of large cap. So that will have enough liquidity for us, if because we want to keep the fund very liquid. So if we have to return the money to our investors at any point of time, we can. We have a 1 year hold on the fund, and we are doing very well on the fund actually for the first month that we are in. Next slide, Jyoti. Next slide, please. Okay, so the performance of the fund, our administrators NAV is yet to release the monthly statements to our investors, but our fund saw a 6% performance in our fund. And this is because we had the investors invest in the month in the fund throughout the month. It is not that we invested all the money on May 1st, and on May 30th we are seeing 31st we are seeing this performance. So we had money come in over the period of 30 days, and that money very quickly got invested. And if you look at it, we are around 6% positive on our fund. So this is certainly much better in terms of overall return. Obviously, this is very correlated to the performance of Bitcoin and the 5 stable coins that we have. And the 5 stable coins that the fund is invested in are Ethereum, Solana, XRP, Cardano, and Shibu. So these are the 5 small exposure we have. Those altcoins actually took a massive beating in the month of May, which is why our performance is at 6. I think the altcoins usually catch up after the Bitcoin has reached at a certain level. There is a good correlation between Bitcoin and altcoins. So we should be seeing the altcoin season start, in a couple of months from now. And when that starts, I think our fund's performance will catch up, particularly on the 20% exposure to the altcoins that we have. But otherwise the fund is doing very well. Our fund is open right now for investors to invest more money. It's $50,000 minimum. So if you're looking to invest in a fund which is completely liquid, please do consider our fund. And this is the right time to invest, because I am a very strong believer that Bitcoin is going to have a huge run up this year, given what is going on in the world. So take advantage of the time and feel good by end of the year. Next slide. So here are the fund terms. As I said, it's $50,000 minimum, and we have a hurdle rate of 8%. And the performance fees, it's 2 and 20. But if you are investing more than 250k, the fees get lowered. And we have a very good ecosystem around us. NAV is our fund administrator. Doyer Law is our securities attorney, and Spicer Jeffrey is our auditor for the fund. and we custody with Coinbase and we bank with Axis Bank. The fund is close to about $1 million now. So please consider our fund because the timing is right, and the minimums are not high, and it's a very liquid fund. We just have 1 year hold on the money. After that, you can withdraw it if you want to. But I think investing in our fund is like creating an opportunity to create generational wealth. And that is the reason I put all the effort being creating this fund. So, invest in the fund, leave the money there and see it every 6 months, and you will see your money grow. And that's what I personally believe in, and that's what I'm personally doing for my assets as well. Next slide. Next. Jyoti, next slide, please. Okay, we have
It,
yeah, now I can see the new slide. So we have the S&P Global Manufacturing Index, numbers come out next week, and then the consumer confidence numbers, and then again, Fed Powell speaks. Then we have our GDP numbers for quarter on quarter for Q1, and on 27th we have the core PCE. So it's a very, very news-filled, macro-filled week next week. So this is where I think the volatility will be very high. And with all these good news, bad news, good news, bad news coming in, I think we will end up with a very flattish week next week. Because there is nothing new that Fed Chair Powell is going to speak. We all know that. And the consumer confidence is kind of flat right now. And global manufacturing and services index, it's kind of going up and down every month. Few months have been good, few months have been bad, and not bad, okay. But so we will have to see what happens this week. And the most important numbers are going to be GDP, which I think will be okayish, and core PCE numbers, which is very close to CPI, so which I think is going to be only heading down, at least for now till September. So flattish week next week, or maybe some upside, maybe 0.5% or 1% up on the week. So let's see how it goes. Yeah, next slide. Okay, performance of our models. As I said, S&P was down 0.46%. If you look at our models, growth did very well, almost 0.48% up, and value was 0.19% down. And international took beatings, and crypto and metals, took a little bit of a beating on its chin because of the downside that we saw on gold and Bitcoin. Metals took a little bit of beating, and that's why I was saying, this is the good time for you to invest in metals and commodities and our crypto fund. If you're interested in our crypto fund, or if you don't have any exposure to crypto, this is the time to get that exposure, in my opinion, because it's an asset class that you need to have at least anywhere between 5 to 10% of exposure. So please consider this, as an asset allocator. I'm telling you that you need to have exposure at least in Bitcoin, if not others. But our fund will give you that exposure to multi-managers, multi-coins, and a very liquid fund. Now, coming to our individual stock portfolio models, if you look at the AI tech model, did very well for the week, and then the high beta did very well, 2% up. And then when it comes to other countries, India, Japan, China, all of them took a beating. And if you look at the contrarian model, I was talking to you about platinum. It's up 16% for the week. So for the year. Yeah, yeah. So it's up almost 15.84% for the year, and that model has platinum in it. And as I said, the commodities really took a beating this week. That's why all the commodities were kind of either down or kind of flat: silver, platinum, Bitcoin, gold, all of them. So this was the last week was the week where stocks and the commodities, including gold, was down. So it was a good week for somebody to start getting back in the market if they were sitting in cash. And but we are very close to all-time high. Doesn't mean to say this is the best point to fully get in, but it is certainly a good time to to buy the dip and then slowly get in the market if you are not in the market at all. And when it comes to crypto, as I said, we are at close to 103k. We went to almost 111k, so you see the margin there. And I'm expecting crypto to go, Bitcoin to go around 180 200k. So good timing to kind of start putting in some money in crypto. and the equities market, overall. Yeah. Next slide. So we have a lot of structured notes today to kind of share with you. I'll request my colleague Anup to take us through this.
Yeah. Thanks, Sudhir. Jyoti, I hope you're able to hear me.
Yes.
Okay. Thanks, Sudhir, for giving a brief of how the month of June has an impact, and especially on the geopolitical situations and tariffs to watch out for next week's. You spoke about commodities, crypto fund, and especially what to watch out for next week. Two things before I get into the structured notes. There is a QR code in most of the slides. So anybody who's wanting to join the WhatsApp groups, please scan that, and that way you get a regular update on the market and all the new services that we are offering. That is number one. Number two is we are also very happy to inform that we had two income notes that called out that was which were launched earlier this year, the month of March, and as a result of which, the customer, our clients not only got 30% income per year. These were for Palantir, Nvidia, MicroStrategy, and Tesla. But they also got their principal back. Okay. Likewise, there was one more note for Amazon, Nvidia, and Microsoft. This was giving around 20% per annum income. So that was also called out. So that is a good news for the clients who have invested in those income-related notes. Okay. Now coming to the
It's something that's updated online also, right, Anup, on our structured note?
yes, it is updated. Okay.
Yeah. So those who keep asking us for, our experience in structured note, what has happened to some of the past notes, please go to that web page. You can see all our currently open notes, closed notes, and the matured notes. So the income notes are the ones that will get matured first because of the calling option in it. Yeah.
Okay. Thanks, Sudhir, for that update on the website as well. So now coming to this, we have one income note and three growth note. The one that you are seeing here is the income note, and there are combinations. There are a few combinations over here that you can choose and pick. I'm just going to explain one of them. Assume the Nvidia, Tesla, and Palantir, the last one, which is giving you 30% coupon. Now, as long as the barrier of the coupon or the stock price doesn't breach the barrier of 60%, you continue to get 2.5% income. In case if the barrier drops, that is what we have given in the scenario, month 5 to 6, then you don't get the coupon. But moment the the tickers rebound to above the barrier, then you get it for all the previous months. So that is what we call it as memory feature. Okay. And at the end of the maturity, which is end of year 3, as long as the tickers are above those barrier that has been put forth by the bank, you get your money back. If not, it is 1:1 reduction. And these coupons can be called early also. Few of them are auto called, few of them are issuer called. And one thing to remember, especially for the Microsoft, Amazon, and Tesla, the second line item is there is something called as a star feature. The star feature is very interesting feature wherein if the one of the stocks is positive at the end of the maturity, in this case 3 years, and the rest of them are negative to whatever extent they can be negative, you still get your money back. So that is if any of our clients are pretty conservative and they want to look in for some sort of assurance, this is a good stock combination to consider. So this is about the income note. Any questions, as always, put it in the Q&A and we'll have that answered toward the end of this.
Second note, one of the question that keeps coming up, Anup, is Tesla. You guys have Tesla in some of the notes, and why do we have to take more exposure to Tesla, right? So this one store note, which is Microsoft, Amazon, and Tesla, let's say if Tesla is down but one of the stock is up, let's say Microsoft or Amazon, that 12.56% and the principal is kind of more secure than the other two, correct?
Yes. And with the memory feature, you tend to get the money back as well. So yes, you're right. Okay.
Yeah. And also regarding Tesla, we all feel, reading the news that we get to see, and all the fights sometimes that we got to see, between Elon Musk and Trump. There is always this question, is Tesla going to continue to be in the market forever? But Tesla is a very innovative company. There is no other company like that in the space of software, autopilot, and technology, overall technology. So I don't think the company is going anywhere, but the valuation is pretty high. So how much exposure you need to take in that one company within your portfolio? That is the primary question to ask. It's not whether Tesla is a good company or a bad company. If it's a bad company, it would not be part of S&P 500, or no, so many people would not be buying that stock and giving it that level of valuation, right? So most important question is, should you want 10, 15, 20% exposure, or should you contain your exposure to it to 5 or 6% of your overall net worth? That's the first question that you have to ask. And then it's not that we just bring Tesla notes, right? We bring a lot of notes. And it's not that we just bring income notes. A lot of you may not want income note at all, because you may want to have growth notes, because if you're making good amount of money from your job, the question is, why do you need income? Because income notes are taxable as regular income, whereas other notes that we have, the growth notes, they're taxable as capital gains. So but if you still need income, my recommendation here is, you may want to spread your money across 3 different notes. If you have 100k to invest, maybe put 33% in each of the note. That way you are in all the notes, not just one.
Yes. Thanks, Sudhir, for that. And diversification is very important. Jyoti, if you can go to the next slide. Thank you. So the next three notes that we have got are all growth note. And most of the time we also get a request is, why are we bringing only stocks and why don't we bring the index? So this is a good example for us to get back on the indices. And here the way it works is, it is on S&P, Russell, and Nasdaq 100. If all the tickers are positive at the end of year one, then you get 20.6% return. So as we told in the example, for 100k investment, if all of them are positive in year one, at the end of year one, you get 20,600 as a gain. And in case if one of them is negative, then it goes to the third year. At the end of the third year, whatever is the worst performing, you get double that, double the gain from the time it was traded, which is on June 27th, and you get that principal back as well. So we gave an example. If let us say Russell has just performed 25%, then you get 50% gain, and you get 50,000 as a gain, and of course your principal back to your bank account, right? And
And
of course,
even though this is index based, the returns are more like stock only, right? 20% is
correct,
a solid number.
correct. Plus 2 times at the end of the third year as well. So that's all.
Yeah. Otherwise, we typically don't get to see a 30% barrier, 20% year one, and 2x at the end of year three. That's something that you get to see only in a stock type of structured note. But this is index. As you know, index will not go up so much, not go down so much. Last 2 years, we saw a 20% plus return. So getting 20% plus return with a 30% downside barrier, I think this is the best one can get in the index structured note, right, Anup?
Correct, absolutely. And we had to negotiate a little bit with the client, the bank as well. So we got the best out of it for you.
Yeah, this is
Now,
awesome.
yeah, the next one is yeah, this is the one that is again for July 9th. Here again, these are the top companies that we've got: Meta, Google, and Nvidia. The same concept like the index. As long as all of them are positive, you get 35%, just because these are stocks. And if not, it goes to the third year. Sorry, it goes to this is a snowball note, so this goes to the second year. So at the end of the second year, if they are positive, then you get 70%, which is 35 into 2. If not, it goes to the third year, wherein if it is positive at the end of the third year, then you get 105%. So if you invest 100k, the end of the, if it goes to the third year, then you get 205,000 credited back to your bank account. And this has a 40% 50% barrier. So we still have a good level of protection here as well from a protection barrier perspective. Okay. Now there's one more, I think. If you, yeah, the last one is the one that we had shown last week also. This is trading at the end of the month. This is again Apple, Microsoft, and Nvidia. If any of these stocks are positive at the end of 1 year, you get 35% return. If not, it directly jumps to the third year, and it is a 3 times the growth. So this is also a good one. People who are looking forward for a long-term investment, is definitely a good stock, because it gives you 3 times of the worst performing stock. Okay. So these are the 2-3 growth notes that we've got, and one uh, income note that we've got. And any of the participants who are new here, please reach out to us at the earliest, because you have to open a Charles Schwab account, and we'll help you to open that. And then it takes a few days for you to transfer the money as well.
Yeah.
So
So
just
Anup, one of the question I got from one of our very high net worth client, yesterday.
Mhm.
So he saw all these notes. We sent him that, and his question was, "How much do you suggest I invest?" Because this is a lot of notes, and I'm kind of confused as to how much money I have to allocate. So my answer to that question was, you need to see your net worth, and each of these companies that we are selecting is either a S&P 500 company or index itself. So I will not be uncomfortable if you put anywhere between 8 to 10% of your overall net worth in each note, right? Let's say your net worth is $1 million, 8 to 10% in each note, so 100K, in each of the notes. So if you are presented 4 notes, if you want to put up to 400K, that's not a problem. And if you are a $100 million net worth client, then I wouldn't recommend putting 10 million in each, because I said 10%. I would restrict it to $1 million each, right? So we have clients who are of that level of net worth, and they ask us this question: what is the maximum amount you are comfortable with me putting in this note? So we don't let you put too much. If you want to put less, that's fine with us. But otherwise, this is my opinion for that question. How much? Maybe between 8 and 10% of your net worth, maximum $1 million in each of these notes. So if you have any questions on structured notes, or how much to put, where to put, what's the process, please post a question in the questions box, and we'll take the question at the very end. So Anup, I'll talk about this Kid City now. This is a real estate investment. This is not structured note. This is not liquid. This is not public portfolio. This is very good, high quality real estate in Granbury, Texas. So it's in our own state, tax-free state. If you go to the next slide, Jyoti. And by the way, please keep showing your phone to that camera in case you have not joined our WhatsApp group. So you can be part of our WhatsApp group where we keep posting this information. So this is the building. It's Kid City, USA. This is a very, very high quality brand. It's a franchise, a nationwide franchise, very strong tenant. And we have this building under contract. I think we have about 100 or 200K left in this opportunity. So we are not looking for too many investors. So we are not taking a $25,000 check for this, unfortunately, because we want to contain the total investors in this property just to maybe 3 or 4. So we already have 2. So if you are interested, talk to us and we can help. Next slide. Next slide, Jyoti. So these are some of the pictures, of the property. It is decent property, generating good cash flow, lot of land around, so there is value to the property. Not that we are paying unreasonable amount of money. If you look at what is around that property, we have all of these big name brands around the property, which means the kids going to the school, they are not going anywhere. So if you see Kid City, USA, it's next to the elementary school, Acton Elementary School, and very close to the complete action. You have everything around this place. So great area, good size building, very good price point, lot of land in the deal, which is where which is what we like typically. Lot of land, decent building, good tenant, stable cash flow. Next slide. Yeah, so this is about 5,400 square feet. It was built in 1988 but renovated in 2024. If you look at the table at the very end, the COC, which is cash on cash. If you invest 100K in this, you should be earning around 6,200 every year. That's the income, and the income coming out of this is shielded by depreciation. So literally, you're not paying any tax on this income. So 6%, if you're in California, you are kind of making 9% income. Because you are in a 50% tax bracket, you will be shielded with the depreciation, this income. And when we sell the property, let's say we sell the property in about 5 years, usually real estate is good to be sold once in every 5-6 years to pay off the costs of brokerage and things like that, like your primary residence. And we have a 14-year lease on this from Kid City. So, very high quality tenant, good business, essential service. Even if you look at during the COVID times, these businesses did not lose money, and there is corporate and personal guarantee here. And our responsibility as a landlord is zero. It's a completely triple net property, completely maintained by the tenant, and we have zero responsibility as the landlord. So next slide, please. Yeah, very quick look at the cash flow. We can take you through this if there is interest. Next slide, please. Next slide, Jyoti. Okay, some more information. I already covered this. Again, if you look at the pending cases, there are no legal pending cases against this tenant, against this brand. So the Kid City as a brand, was founded in year 2000. So 25-year-old company with annual revenue of about $82 million. So they have 130 locations, growing very well. And one of those brands that has been doing very well. That's the kind of tenant we are having in this building. So if you're interested, yeah, next. Next, please. Yeah, go to the end, Jyoti. This is done. Go to the next subject. Yeah, so we can share this slide deck with you. This talks about our due diligence about the city, about the brand, about the tenant, about the lease, about the terms, about the pro forma cash flow, all of that. So we can share this with you if you are seriously interested in it. Again, we are very close to closing this. So it's not available for small tickets. So more than 100K is what we are looking for. So if you are interested in anything like that, please do let us know. With that, I think we are done with today's webinar, and we are now happy to take questions.
Yeah, thanks, Sudhir. There are a couple of questions so far that I can see. Or probably more now coming up. Is there impact on when the notes? Is there an impact on when the notes are purchased? I mean, buying at the year end is good, or is it the mid year?
Well, I had a crystal ball to tell you that, usually at the end of the year, the stock market goes up. November, December are the best months seasonally. As I said, June is not such a great month seasonally, but seasonality does not work all the time. Last year, we saw December last 3 weeks go down, right? The Santa rally did not do well in 2024. So, there is no crystal ball with us, but what we have is a 50% barrier on the downside or a principal protected note. So I would say we should not look at timing the market. Rather, we should be smarter than the market by diversification. So it is better we keep buying these notes, based on our overall liquidity position, we keep buying these notes, and then, build a very nice portfolio of notes. Instead of buying Nvidia by itself, you buy a note which has Microsoft, Amazon, and Nvidia. That gives you income. If you want to buy Coinbase, instead of buying Coinbase directly in the market, which does not have a downside protection, you buy this note which has a 50% downside protection. So the Coinbase note that we bought, when Coinbase was even part of S&P 500, and everybody thought Coinbase was very expensive then, but after getting added to S&P 500, the numbers have almost gone up 40%. And look at Palantir. Our income note for Palantir was $66. Today it's almost $130. So there is a 50% barrier on $60, plus market has taken the stock up by 100%. So technically, we have close to about 200% barrier on our note as of today. So it is not a good idea to time the market, because nobody can. Whoever says they can are fools, and you should not trust them. Best is to keep investing in the market. If you have liquidity, buy the dip, buy a note, buy the dip, buy a note. That's what you should do.
Yeah, thanks, Sudhir. And we also call it as dollar cost averaging as well, right? And secondly, I think the next question is not clear. There are a couple of notes that I see it in the website which are matured and distributed. That is right, and we will definitely have the new notes added shortly.
Yeah.
Why they are not called so far when prices are more than barrier? So not very sure about what the question is.
No, so the question is, I think the barrier doesn't mean that, if we hit 50%, you will get the money back. Barrier means, at the end of the term. So if it's a 3-year note, and if you have a 50% barrier, that barrier comes into picture only at the end of the term. Not,
Jyoti, would you mind going to that income note, please, Jyoti? Yeah.
yeah, not during the term, So during the term, that barrier doesn't mean anything. So if it's a 3-year term, at the closing, you have a 50% downside protection from the purchase price. So if it's a
Yes.
3-year note, basically you are getting, 50% from the day we purchase this note. So that's a significant hedge and protection for our money.
Yeah. So yeah, thanks, Sudhir. So just to explain this, in fact, let us just take an example of the second line item wherein we have Microsoft, Amazon, and Tesla, right, which is giving around 12.6%. So this is a 3-year note, but for sure, the bank BNP Paribas is not going to call for 1 year. But after 1 year, if the tickers are flat or positive, the bank has a right to call. Again, I just wanted to, not bank has a right to call, it is auto callable. That means if after 1 year, if the tickers are flat or positive, it will be called. But for some reason, let us say after 1 year, one of the ticker is not up, the two of them are up and one of them is negative. Let us say Microsoft is negative, then it will not be called. So then it will go for the next quarter, which is the 15th month. Again, if all of them are positive, it will be called, and you will get your money back. Until such time, you would have got your income as well. Okay, so wherever there's an auto callable, it will be automatically called. The previous one, which says issuer callable, it is in this case it is Barclays. It is at the discretion of the Barclays to call as well. So this is a 3-month note. So they said, all this barrier comes into picture, especially for the principal, is if the note continues to live for 3 years, and at the end of the 3 years, if as long as the value of all that just the stock is more than 50%, you will get your money back. Otherwise, it is 1:1. Okay. I hope that will clarify. If not, please reach out to us, and we can more than happy to explain. Okay. What is the difference between structured notes and covered options? That's the next question that we have got.
Yeah, so covered options is where you basically take a stock and cover it with an option, either to generate income on that stock, or you are buying a put to cover the losses that gets generated from that stock. So here, we in our company, we don't deal with options, because options you cannot deal with for a large amount of money. As a company, we manage close to about $100 million, and we are just about 1.5 years old, and we are growing massively. So options is something that we don't do as a strategy for trading. But what we do is we do call writing. If you have a 500k position in Nvidia, and you're worried that it's going down, so we can place a collar on it, or if it's not making anything, we can write calls on it and generate income. But these structured notes that we have, these are instruments which give you a predictable return for a predictable downside, right? So if you have some money, and if you understand options, and if you want to play with in that options market, certainly you can play that game. But we deal with companies like Goldman Sachs, JP Morgan, which has a very, very high quality options desk, and they generate these structured notes for us, and we trust them and their knowledge and their expertise and their size, because these are market makers, right? So these banks can break or make the market. So we go with such banks to create these notes, so we get a guaranteed and a structured high yield income note, growth note, or a income and growth note. So that is how these structured notes are structured.
Yeah, thanks, Sudhir. And so far, those are the questions that we've got. Again, please feel free to scan this barcode that you see, especially to join our WhatsApp group. And if there are any further questions, then you reach out to us. And thanks Sudhir and Jyoti for the time today. And thank you all.
Thank you very much.
Thank you.